Hey everyone, Joseph Henson here with Henson CPA Group. Wanted to come to you this week and talk through another topic that a lot of people have asked me about. This week we're going to talk about tax strategies, specifically tax strategies for veterinarians. And so let's go ahead and look at the main slide here, tax strategies for veterinarians, maximizing deductions and credits. Practical tips for financial efficiency. So a little bit of an introduction here. What is the importance of understanding tax strategies? A lot of my clients earn anywhere from $500,000 a year up to $3, $4, $5 million a year. If you don't understand tax strategies, you will be overpaying in taxes. You have to understand that there is a U.S. tax code, and properly utilizing it, you can take your tax bracket from 40 to 50% down to 24, 25%. What is the goal of this? Equip veterinarians with essential tax knowledge. A little bit of an overview of topics to be covered will be maximizing deductions, depreciation and amortization, tax credits, record keeping best practices, tax planning throughout the year, and handling audits, tax audits and notices. So let's have an overview of tax obligations for veterinary practices. You have a few different tax obligations. The main ones you're going to see are federal, state, and local taxes. So with the different types of taxes you have income tax, which you know is reported on your personal tax return and potentially your corporate tax return. Payroll taxes, which are taken out every week, every 2 weeks, once a month. And sales tax. Sales tax will be calculated based on goods sold. Every state has its own rules among income tax for the state, payroll tax, and sales tax. Getting into those would take a lot of time, but these are the three main taxes you will look at within your business. The next is payroll and self-employment taxes. The employer responsibility for payroll taxes is going to be about 7.6% of every dollar earned will go to Social Security, Medicare, Medicaid, the typical FICA taxes. The employer responsibility is also half. And then some considerations we want to look at will be self-employment tax. If you are a Schedule C or just sole proprietor, LLC, limited liability professional, and you're only reporting taxes on your personal tax return, you a lot of times will be paying the full self-employment tax, which is over 15% of every dollar you make after deductions on your business. You do get a small credit on that for half, but just know that is something you have to look at. If you're an S Corp, you have pass-through taxes. There's a little bit more complexity there. Next, we're going to look at maximizing deductions. What are some common deductions for veterinary clinics? Office supplies and equipment. These are expenses that are necessary and typical for a business. So if you have office supplies, you might have paper if you're not fully paperless, pens, sometimes snacks, equipment, your x-ray machines, your ultrasound machines. There's a lot there that is able to be deducted on your business, depending on the cost of the supplies. Professional development and training. You should always be going and trying to get continuing education as a veterinarian. You know that for licensing purposes, you will be required to have continuing education. The nice thing about it is, as long as it is not to gain a new skill, this can be a pretty major tax deduction for your business. You can have your business pay for this and the travel expenses related to getting to that training. You have to do this anyway. You should be using your business to pay for the necessary education. Home office deduction. There are certain criteria to qualify, and we can go through that another time if you want. But one of the things is you dedicate a portion of your house solely for business purposes. You're not using it for personal. You don't have people coming in and out that aren't patients or aren't related to the business. You are typically only using this, and by typically I mean exclusively using this for business. A way to calculate the deduction, there is a standard, which is about 300 square feet of your house, and they will take just a typical deduction. Otherwise, what you do, measure your entire house, measure what is used only for business purposes. We can take a portion of your rent, your interest, your electricity, water, all of these that can apply to your home office. If you aren't doing this, start looking at it. It's a great way to save thousands of dollars a year in taxes. Vehicle expenses. What are deductible expenses? You have mileage, you have maintenance, you have storage. There's a lot that go into this. The main issue you're going to have is making sure you're tracking it. There are a lot of apps on your phone that will just start recording when you drive your vehicle. As soon as you start to drive, it will record. Your job is to go in and say, is this a business expense or a business trip, or was this a personal trip? If you do this every drive, you're going to see thousands of dollars in savings. Now, you do have to choose between actual expenses, so maintenance, tires, licensing, a whole plethora of other items, versus the standard mileage rate. If you do the standard mileage rate, it takes into account your actual expenses. A lot of times, especially if you are a veterinarian who does a lot of home calls, or you don't have an office because you're just a mobile vet, the actual expenses are going to make a lot more sense, but you want to run a calculation to see which one makes sense for you. So let's go through a little bit of understanding depreciation and amortization. I'm not going to get too far into this. This isn't something that you have to worry too much about. Your accountant should be handling this, especially your tax accountant at year end, because it matters for your taxes. So some methods of depreciation are straight line depreciation. You have an asset, let's say a office chair. We're just gonna pick a low one. It has a useful life, 3, 5, or 7 years. What we do is take the cost, $500, and say it's a 5-year asset. We're going to take 1/5 or $100 per year as a deduction for your books. A declining balance method, there's a couple, you have 1.5, you have 2, or double declining, but this is a way to take larger depreciation earlier on and a little bit less later on. Again, I'm not going to get too much in the weeds on this because of the fact that someone's handling this for you. If they're not, you need to talk to someone else. What eligible assets are there for depreciation? Equipment and machinery over $250. Now, for small businesses and for others, if you have a list of rules for your business, you can actually do a de minimis deduction for any equipment and machinery under $2,500. This way, you're not tracking it for tax purposes or books purposes. You are going to take 100% of that over the life. Otherwise, you're looking at 3, 5, 7 years for the equipment and machinery, just on average. Building and improvement. For buildings, you have a long life. For improvements, again, a long life. You're going to take some every single year if you own the building. Now, if you're renting, that doesn't mean that if you've made improvements, you can't depreciate that. You can. What you're going to do, though, is have a leasehold improvement. I can get more into that if you guys want, but right now, just know there are deductions even for people who are renting their practice building. What is the impact on taxable income? How does depreciation reduce taxable income? What it does is offset the purchase over the useful life. Again, if it's a 5-year asset, so if it's a computer that has a depreciable life of 5 years, we're going to take that and depreciate it over the life to reduce taxable income, better matching how long it should last. Now, we can get into timing and strategic planning for some people who need a lot of deductions because they know, hey, I want to keep as much of the money in the business this year as I can. You can actually take 100% with different forms of depreciation. There's bonus depreciation, there's makers, there's also a few other methods we can take to depreciate your asset fully. That's not always the best plan, as if it's a $100,000 piece of equipment, which isn't that hard depending on what the equipment is. If you take 100% depreciation this year and you take your taxable income from say $200,000 to $100,000, great. We can reduce taxable income. We can reduce how much tax you're going to pay this year. Next year and the following 3 to 7 years, you won't see as much. So you will pay higher taxes potentially. So we always want to look at the timing and plan around what your plans in the business are. Next, we can talk through the leveraging tax credits. There are a lot of tax credits. This is something that isn't always talked about, but they're always available. So research and development, R&D. There are certain eligibility criteria. If you notice, I put eligibility, that's okay. Didn't notice that before. I also have examples of qualifying activities. It happens. But projects must aim to create new or improved products, processes, or services. It must involve a process of experimentation to resolve technical uncertainties. What are some examples that you might have? Well, developing a new treatment method for treating animal diseases. Improvement of veterinary equipment, which is developing new technologies for better patient care. These are things that you can do within your business. There has to be uncertainty. There has to be a process. You have to document this because there are a lot of hiccups that can happen. You undergo studies. We want to make sure this is done right. If you are in the business, let's connect. Let's find someone who can help you do an R&D tax study. Work opportunity tax credit. What is this? This is hiring from targeted groups. A lot of times, people who have been in prison, they can be someone available for this. Now, this doesn't apply to every city, every state, but it is something available. There are certain credit calculations and benefits to this about how much of their salary you can actually get a credit for to help incentivize you to hire in these areas. Energy efficiency credits. The government wants to incentivize you for doing energy efficient improvements, and there are a lot of potential savings. Windows, AC units, there is a lot. Solar panels potentially. One of those things that if it's interesting to you, let's talk through it. Let's see how it can work for you. Record keeping best practices. What are the importance of detailed records? Well, you have to be able to support your deductions and your credits. You can't just run everything through your business and say it is a business expense. It has to be necessary and typical for your business to deduct it. That means you can't fly off to Jamaica for a week and say it's a business thing because of the fact that you might be talking to someone there about your business. That doesn't work. You have to have detailed records. And for certain, anything over $50, you want to keep a receipt. 5-7 years. We want to make sure you're covered just in case there's ever an audit. And that's one of the things that will help prepare for an audit is keeping these detailed records. Mileage, vehicle, salary, everything, you want to keep it available and on hand. I like digital records. I don't want a lot of clutter in my office surrounding the fact that, hey, let's look at all the paper I've ever used for the last 7 years. Tools for effective record keeping. I mention every week, accounting software. QuickBooks Online is a great one. Xero, FreshBooks, there's a lot here that you can use. And again, digital receipts and documentation. Keep these on hand just in case anything ever comes up. You also want to do regular reviews and updates. You want to keep your records current. You want to make sure you're staying compliant with local and federal laws and regulations. You don't want to have something so outdated because it's just not being reviewed, especially when it comes to your financial side. Periodic financial reviews. I encourage my clients to look at their financials every quarter. Much preferable is monthly. We want to see what the growth is. We want to see, hey, you're struggling right now. What is going on? Oh, you took 2 weeks vacation. You were closed down. Okay, this makes sense. Let's make sure we take this into account next year for planning. Tax planning throughout the year. taxes are not a surprise. You have quarterly estimated tax payments. Extremely important. If you don't make quarterly estimated tax payments and you are going to owe more than $1,000, you have to make these to avoid penalties. There's calculation here, what the interest, what the penalties are. I'm not going to go into that. If you really are interested, let me know. Happy to let you know. You do 4 of these per year. You want them to be timely so you aren't charged interest and penalties. Year-end tax planning strategies, like I said, accelerating expenses, deferring income. What would accelerating expenses be? If you're an accrual person, you can actually pay bonuses and deduct them in the current year, even if you pay them in the first 2.5 months of the next year. Deferring income. If you have accounts receivable, or you have a lot of, if you're cash basis and you say, hey, just hold this until the beginning of the year, there's ways you can defer income. Even in a veterinary clinic, there's risk there. You want to make sure you're getting paid. You want to make sure you have proper cash flow so you don't have to worry. With this though, doing this can help save thousands and thousands of dollars on your taxes. Working with a tax professional. What is the benefit of professional advice? CPAs, EAs, tax professionals, lawyers, a lot of us who work in this field maintain records throughout the year and keep going with continuing education. Just like you guys, I'm a CPA. I'm required to have a certain amount of continuing education every single year. I do this to not only maintain my license, but also to make sure I'm staying up to date on the latest tax laws and changes. There's also different credits that come out that I have to be aware of. In 2026, a lot of the Tax Cut and Jobs Act goes away for individuals. I need to be aware of this to properly plan for my clients so we know what's going to come up next. Handling tax audits and notices. There are common triggers for audits. They have a dirty dozen list that come out every year. You want to avoid a lot of those. Captive insurance can be one of those, but can also be a huge benefit if properly handled. There's a lot. Red flags on a tax return. You have a code that goes onto your tax return. And what this does is allow a computer to look at your income, especially on a business return, and your deductions. If something is out of whack, if all of a sudden the average, and I'm just throwing out numbers, spend on meals and entertainment is 1% of a business, and you're averaging 20, 30%, you will be audited most likely. We want to make sure you are in the right area here. High deductions amounts, food, travel, those are some of the higher ones. Vehicle expenses potentially. These are areas we want to make sure we're staying compliant in, and you're not going to have red flags on your tax returns. Now, what happens if you get audited? So preparing for an audit, gathering necessary documentation. The IRS will send you a letter saying, a lot of times, I just need more information. Hey, we need support for your meals and entertainment. We need support for your payroll even. For some reason, it's not matching what we have. Where is your support? If you gather that, you can provide that. And with that, you don't want to over-provide to the IRS. Give them what they ask for, nothing more. There is an audit process. Typically, you get an automated letter saying, we need this information. Sometimes it goes to another IRS agent. You want to be replying to these in a timely fashion. Now, talking about replying, when you respond to IRS notices, timely, and you are allowed to have adequate representation, so seek professional assistance. Personally, I don't think anyone should talk to the IRS without a qualified person representing them, because there are so many issues that can arise on this. If you're currently going through an audit, let me know. I have contacts who can help you out if I can't do it myself. I want to make sure you guys have the best help on this, because the IRS is not your friend. If you give them too much information, they can actually dig something else up. If you don't give them the information they have, you can now lose out on possibly tens of thousands of deductions, resulting in tens of thousands of taxes owed, and penalties, understatements, interest. These add up. So in conclusion, we have a few things to recap. We went through and talked about a lot. We talked about maximizing your deductions, depreciation and amortization, tax credits you can have, some record keeping best practices, making sure you're not waiting until the end of the year to tax plan, and handling tax audits and notices. I think it's extremely important that you have your books digitized in 2024, 2025, 2026. In this century, there is no reason to have paper books. There is no reason to have just a ledger on paper because it's all easy. It's at your fingertips. If you're using QuickBooks Online, it's extremely simple to get that to your accountant to make sure the books are right, you're having appropriate reconciliations happening. It's extremely important to do that. Now, some final thoughts on the tax planning for veterinarians. Constantly learn, constantly improve. We want to make sure that by doing this, you are maintaining a level of professional ethics in your company, that you provide the best quality of service to your patients. There's a lot of available resources out there. I know it sounds simple. Go to your local veterinary society in your state. Most states have them. The AVMA, the AHA, there's a lot out there. Utilize it. If you need tax help, if you need financial help, if you need outsourced CFO work done, let us know. Shoot us an email and just see how we can help you. My information, as always, is on the screen. My name is Joseph Henson with Henson CPA Group. My email is Joseph with 2 E's at Henson CPA.